overnight, China hurled these new accusations at President Trump as it took action, bracing for a real trade slugfest. President Trump is now promising a new 50% tariff on China, on top of the other new tariffs, which are on top of existing tariffs. Combined, this would make U.S. tariffs on imports from China a whopping 104%. And yet, despite all this tough talk, the markets, they seem a little less agitated this morning. After days of these massive losses and trillions of dollars in value evaporated, U.S. stock futures are pointing up, for now at least. It comes, and it may be because of the fact that some members of his administration have relented on their no negotiation stance. Some members of the administration. The markets in Asia, you can see right there, most of them rebounded after their sharp sell-offs. This comes, though, as China accused the U.S. of blackmail, and China is vowing to, quote, fight to the end if the president moves ahead with all of his threats. So let's get right to CNN's Mark Stewart in Beijing here, because the rest of Asia is in a different place than China is right now, and China really seems to be gearing up for a serious fight.
Indeed, John, despite what the White House may want, China and Beijing is making it very clear that it's not going to budge. And once again today, we saw this shift from diplomatic language to something that's much more defiant. You brought up that phrase, mistake upon mistake. That is some of the language we heard today from China's Ministry of Commerce. And it's taking a very strong stance. In fact, it also went on to say that China will resolutely take countermeasures to safeguard its own rights and interests. As far as what those countermeasures could be, we heard from a state media commentator who brought up the point that we could see more tariffs targeting agriculture, things like soybeans, which we know are so important to American farmers and the broader economy, even restricting or banning American films. We heard at a press briefing just about 4 hours ago from a spokesperson from China's Ministry of Foreign Affairs. The messaging there, very strong, very firm. Let's listen to what he had to say.
Pressure, threats, and blackmail are not the right ways to engage with China.
Markets lost $6 trillion the week the tariffs were announced. The dollar fell. JP Morgan economists say the Trump administration's tariffs, if sustained, would be the biggest tax increase since 1968, with the recession risks now above 60%.
We forecast recession. We're not by any means saying that's the only thing that could happen here. I think we have an economy that is still on solid ground. It's getting hit by big shocks. What we got this week was a very big tax increase on U.S. businesses and households. We would scale it in terms of a roughly 20% rise in tariff rates to basically the highest tax increase we've had in the U.S., if it's going to be fully delivered, that we've had since 1968.
This is the biggest policy mistake in 95 years. It's a self-inflicted wound. Unforced error, did not have to happen.
Some economists worry that the Federal Reserve cannot easily offset the damage due to elevated inflation and credibility concerns.
The embers of inflation are still smoldering. We are in a different context than we were, and the Fed has evoked several times the cautionary tale of the 1970s.
I don't know why Trump didn't learn the lesson of the Smoot-Hawley tariff, because I know the Fed learned the lesson of its mistakes in 1930, 31, and 32. That's one reason why the great financial crisis did not turn into a Great Depression.
The Smoot-Hawley Tariff Act of 1930 raised U.S. import duties to record levels. It triggered global retaliation and may have deepened the Great Depression. Here's how long the tariffs might last, and whether the U.S. is heading toward a recession. The president has broad executive authority over tariffs, allowing him to raise, lower, or remove them at will. This flexibility has fueled speculation about President Trump's endgame, with some viewing the tariffs as a tactical opening move designed to create leverage in future negotiations.
I would assume that this will not be in place in a month, 2 months, definitely not in the back half of the year. So I'm in the camp that this is the beginning of a big negotiation. We're going to be hearing about tariffs for quite a while now. And the president has set the stage for what he loves to do. He'll be negotiating every single day for the foreseeable future with each one of these countries.
Donald Trump has a lot of motivations. Many of those motivations contradict each other. The number one motivation is that the United States runs a trade deficit. that we buy more from the rest of the world than we sell more to the rest of the world. I think that's largely a function of American strength. I don't think these tariffs are going to help. And so in that sense, we're still going to have a trade deficit 6 months from now. We're still going to have one 3 years from now. I think some of these go away because they're just so crazy. But I don't think the 10% is going away. We have just so much uncertainty now, record amounts. How much does this matter? How do these tariffs get resolved? I think they're just so crazy that we're not going to have them 2 months from now. On the other hand, I didn't think we'd have them now, so who knows?
There's also a question of how much pain in the stock market the White House is willing to tolerate.
It's essentially an economic Armageddon. You know, if these tariffs stayed in place, this is as nervous as I've seen investors going back to, COVID March 2020. You have to assume that these tariffs don't hold in their current form. If they hold in their current form, then essentially you have 15 to 20% demand destruction across the board in terms of costs that are actually going to have to come through.
The most important thing is for countries to come to us not offering zero tariffs, which is disingenuous because it won't get us anything. What they have to do is tell us they're going to drop all their non-tariff cheating. That takes a little time here, okay? We got a $1.2 trillion deficit. I expect the market to quickly find a bottom.
They've made a conclusion that the market is efficient. Hopefully this will be a negotiation of let's get to the table, let's negotiate fair deals. The tariffs were the only thing that got China to the table to negotiate. And there's no question that China's market has been closed to us for a long time, and our market's open to them. And if we could rebalance that and we could create an opportunity for U.S. companies to do business in China with a growing middle class, that's a big opportunity.
In response to a request for comment, the White House pointed CNBC to President Trump's statements to the press on April 7th.
There can be permanent tariffs, and there could also be negotiations because there are things that we need beyond tariffs. Tariffs are very important, but there are a lot of things like opening up countries that were totally closed. China is essentially a closed country. In fact, it is a closed country. So we're going to get fair deals and good deals with every country, and if we don't, we're going to have nothing to do with them.
Commerce